Let's dig in more now on the challenges facing regional banks. The cratering of New York Community Bank once again raising concerns whether other banks may face similar issues. Joining us now is WaFd Bank President and CEO Brent Beardall. Brent, welcome. Good to have you with us. It's been, by any standard, a rough year for regional banks. Maybe not including yours particularly, but it's hard for the stocks to make much progress in this environment. What do you say to investors who are concerned about the regional bank space generally, and how do you differentiate your bank from those that have run into trouble?
Tyler, good to be with you, and some very good questions, and investors are rightly asking those questions. And I would say regional banks are really very strong today. Obviously, what happened last spring, that was a crisis of confidence about the depositors. Were their deposits safe with regional banks? And there was an over-reliance on uninsured deposits on the banks that failed last year. And that simply is not the case now. If you look at New York Community, I think 3/4 of their deposits are insured deposits. And really, it comes down to a credit quality question, something that we've all been asking the question since the pandemic started. What would happen with the values of commercial real estate? And then even if you look at commercial real estate, one of my personal pet peeves is that is far too broad of a category. We need to ask what types of commercial real estate. And within commercial real estate, I think the real question is how much office exposure and what does that exposure look like?
Well, there's commercial real, as you point out, there's commercial real estate, and then there's commercial real estate. There's offices, industrial, retail, apartment buildings. With specific reference to WaFd, how much do you have of your loan book is in offices?
A great question. For WaFd, we are only just under 5% of our portfolio is office. And I'm very happy to tell you that we don't have a single delinquency in office. And we run current valuations on that portfolio. And right now, I think our loan to value is 64%. So I feel very confident where we are, right? But you never know. And the one thing that really feels good about office now, compared to a year ago or 2 years ago, you're getting more people coming back to the office. And you know, it is interesting how we get so worked up about certain segments. If you go back to when the pandemic started, one of the segments in commercial real estate everyone was worried about was hotels. What's going to happen in hotels? Nobody's going to hotels. No one's traveling. And who would have thought 3 years later, hotels are back to booming? In fact, many of our hotel operators are reporting profits that are 20, 30% greater than where they were in the pandemic. So something tells me that we'll figure a way as a country to figure out what to do with these office spaces.
Brent, I know we talked through this a bit in the first question about sort of regional banks in general, but maybe we can focus on WaFd. If I'm an investor and I'm still a little worried about what happened last March when I'm evaluating where to put my money if I'm interested in a financial company, why does a company like WaFd make sense when I could put it in one of the big six? Yes, I understand deposits are insured, but that doesn't necessarily prevent an irrational run on a bank again, does it?
It's a very good question. And I think you have to understand the underlying fundamentals. At WaFd, we've been around now for over 100 years. We've seen cycles. Cycles go up, cycles go down, and no one's immune from cycles. The question is, what is your margin for error? And we keep an excess amount of capital to be able to cushion ourselves for that problem. And if you look at our credit quality, I think we were 8 years before this last year. We had to charge off this last year, but before that, we were 8 consecutive years of net recovery. So it's all about credit quality and how comfortable are you with the credit quality. And I am happy to go into great detail about the credit quality of WaFd. I think you can sleep well at night with WaFd in your portfolio.
Let me turn to the recently, you've gotten approval to close a deal with Burbank, which is a banking entity in California. A couple of questions here. Number one, this was a deal that you announced in November of 2022, as I recall. It took a long time to get approval. Was that approval delayed because the FDIC and regulators were looking more closely at regional banks than they might have previously?
Absolutely, it was. So to give the listeners some perspective, we're a $22 billion bank. Burbank is $8 billion, so it will take us to a $30 billion bank on a combined basis. And as you call out, we announced the transaction in November of 2022, so 14 months. And we've had so many questions. Why the delay? And quite simply, the FDIC and the other regulatory agencies, they're being very thorough right now. The last thing they want to do is allow a merger to happen and the resultant institution wouldn't be strong. So we were very gratified that after all of the homework that they did, that they saw fit to approve our transaction.